This is kind of the million-dollar question. We ask it about every stock. Are people going to go back to their old ways of shopping before the pandemic, or are they going to go back to their old habits before the pandemic? Or are we looking at a very different world, at least for the foreseeable future? And I'm not just talking about retail. I'm talking about, are you going to go back to Starbucks for your coffee if you're not going back into the office? You know, there are all these different routines. We were just talking about Peloton and some of those stocks that are seeing a pullback now. What do you think, Terry? What are consumers really going to do once they're allowed to get back out there in a more normal way?
Well, predicting future consumer behavior is one of the hardest things to do. And I studied this. I'll have for all of my career. And even consumers will gladly predict how they're going to act 6 months from now. And they're generally wrong. So you know, this is going to be the million-dollar question for all of us, and certainly for investors, is how to play that and how to forecast that. But frankly, historically, first of all, there is such a huge amount of available spending power in the pockets of the consumer. They are at unsustainable savings rates at this point in time with low debt. And so they're going to spend that. Historically, they always have under all circumstances. They will spend that over time and get back down to pre-pandemic levels with their savings rates. So that's a big number, like $1.6 trillion or something like that of excess available cash to spend. So where are they going to spend it, I think, is your question and mine. And I think they're going to want to travel. They're going to want to go back and be entertained once again. And when those things happen, Becky, they're going to buy clothes. Clothing is event driven, whether it's going to work, going out on a date, or going to a concert or going on a trip. And so I do think those subjects will regain traction. Maybe not tomorrow, maybe not in 3 months, but over time, I definitely believe they will. And I think we'll start to see that, I believe anyway, in the beginnings of that in the second half of this year.
Terry, there was a report a few days ago that Macy's was kind of sounding out investors about the idea of rolling out some high-yield debt. We've been talking about how that market, there is a lot of demand for it. In fact, high-yield debt, the rates that people have to pay for it have gone to historic lows. And I just wonder if you think that's a good idea.
You know, I'm not sure, because I don't have that inside seat any longer, and frankly, it's okay with me that I don't. But I do think that management and this board is very savvy when it comes to financial, conclusions about how they should manage their business. I think their balance sheet is in good shape today. I think they've taken some good actions over the last year, and I know they'll make that decision over time. But I can assure you that they've turned over every rock and looked at every possibility in terms of making sure that they are ready to go with all cylinders firing on their balance sheet.
What do you think of Kohl's? We talked yesterday about the activist investors who are kind of rattling things there, kind of trying to take over the board. But what do you think of Kohl's performance and how they've done recently?
Well, I don't think they've performed particularly well. But again, they're in that non-essential category, Becky, and so it's easy to throw hand grenades from the outside at any retailer that hasn't performed well when their stores have been either closed or constrained. And so I understand. I've seen this playbook before. It's very similar to something I've seen in the past from these outside investors. And you have to believe, if you're on the investor side, that they're going to bring something new and different and special to the table. And it's not in the write-ups that I've been able to see. But Kohl's needs to perform better, and I think they will be in that category of the second half of 2021 of naturally performing better with or without outside influences from these investors or other investors.
That's a fair point. Just the idea of the essential versus the non-essential retailers. It's a story that's played out again and again, affected a lot of small businesses too, but also these bigger companies that were deemed non-essential. Terry, what else are you kind of watching in retail right now?
Well, the big subject for me, Becky, is how, what's the play going forward here? These big essential guys, and we talked about Home Depot this morning. What a run they have had. Great company, great team there, and they've had an extraordinary run. They've clearly benefited from the challenges associated with the pandemic. But part of that benefit, and it's true of Walmart, Target, Lowe's, and others, is a lot of their competition for certain of their categories was closed, or not performing well, or not strong in terms of their ability to invest in this omni-channel muscle. And so I think that all those companies that I've mentioned have developed this new muscle. They were not great. None of them were great, frankly, with direct to consumer and buy online, pick up in store, curbside delivery. None of them were great at that a year ago. They're all very, very good at that today, the omni-channel experience for consumers. And I think that's going to continue on. So I think there's more legs for these companies to continue to grow, but they are going against huge increases for the next 12 months. And as I said, the non-essential retailers are going against nothing. They're going against down 20%, and the like. So they seemingly, to me, have got potential. This is going to be a market share gain. Coming out of these blocks, I think in the second half of this year is going to clearly be a market share gain opportunity. And those with a strong balance sheet who can invest in those ideas, I think you're going to win.
Shepard Smith here. Thanks for watching CNBC on YouTube.